Thanks for joining us today. Robert and I are going to discuss a broad view of credit and why it's important. We'll be happy to answer any questions following the presentation. If you have specific questions regarding your personal credit, feel free to speak with one of us individually after the presentation. Unfortunately, the good life begins with good credit. So it is important to have good credit. So the first thing we're going to do is your credit history is made up by a number of factors. The information included in your credit history is your name, social security number, and date of birth. It lists where you've lived and where you've worked over the years. It includes all the accounts you've established along with your payment history. Any judgments, liens, bankruptcies, or foreclosures are part of your credit. Any credit or loans that you have recently applied for, and any accounts that you may be disputing because you feel they are incorrect. All of this information is submitted by your creditors on a monthly basis. So any accounts you are making payments on are reporting whether you are making timely payments or not. Additional information is pulled from public records.
How is your credit history built? The credit reporting process begins when you open an account and start making payments. This will start when you open your first credit card or loan, and it will continue until you no longer are having any types of credit or loans. Each month, your creditors update the records and share our account status with the credit bureaus. So once a month, it's like a report card is being sent, and all your loans, credit cards are being reported on how they're being paid, if it's on time or if the payment's missed. The credit bureaus update their records and add the current month to their history of how you've paid the account.
So the information not included in your credit history is any criminal background, no medical information. Sometimes medical collections are reported, however, we do not include this debt when calculating debt to income. Your buying habits and transactions are not listed. We only see the account balances. And there's no record of where you are handling or your personal banking or account balances.
Okay, what is a credit score? It's an automated way of analyzing a credit history. There are computer algorithms that determine what your score is based on a number of factors: how long you've had the specific account, how you've paid it, if you're close to your credit limits, and each credit bureau uses their own formula to calculate their credit score. So even within the three major repositories, there are different models that are used. So one model may not be the same as the other. The scores usually range from 300 to 850, with the national average being somewhere in the high 600s. Credit scores used for mortgage applications are calculated differently than those provided for other purposes. Mortgage applications, all three of the bureaus are hold, and the three scores are looked at, and the middle of the three scores are used in the qualifying credit score.
Okay, so there are a number of factors that can impact your credit score. Making prompt payments on your accounts will help increase your score, where late payments will have a negative effect. How much you owe on your accounts will help increase your, how much you owe on your accounts versus your credit limit. For example, you have a credit card with a $10,000 limit and your balance owed is $9,500. This would have a negative effect on your score, whereas the same card only has a $500 balance would either have a positive effect. Credit mix is secured and unsecured loans. A secured loan is where you would be using something you own as collateral to borrow against versus an unsecured loan. When you apply for loans or credit cards, it is reported to the credit bureaus by the companies you are applying with. Numerous inquiries within a recent time frame can have a negative impact on your score. Same as if you're opening a lot of new accounts within a recent time frame can be negative. There would be a concern with overextending and not being able to make timely payments. There's also a concern with the percentage of revolving debt usage, how much you're spending and using on your cards.
Why do credit histories and scores matter to you? Your credit history serves as your financial reference to companies and people that you want to do business with. It's a predictor of your ability to meet your financial obligations. When an underwriter looks at your loan, they're making a determination if you qualify for the loan based on your previous payment history and your current income information. Lenders use this information to determine if you meet their requirements. Lenders use credit reports and credit scores to determine the likelihood that you will pay back a loan. Your credit history may either help or prevent you from buying a home. Credit reports can also be used for other purposes, such as employment checks, as some employers do require that you have a reasonably good credit score. Apartment rental companies use them to see if there's any judgments that may have been put on your credit report from a previous landlord that you may have not paid rent to or you have a past due amount with. And utility companies also look at your credit. And if they determine that there's been a number of utilities that you have had a poor payment history with, they may require an additional deposit when you want to set up a new account with them.
So your credit is pulled for many situations other than applying for just a mortgage. Depending on who is pulling the report would determine how many bureaus or what type of report they are pulling. Most employers will pull a credit report because they want to make sure their employees meet a certain standard. Opening any accounts, vendors, or credit cards are going to pull your credit to verify your previous payment history. So the same thing with underwriting your insurance, court orders, eligibility for government licenses, and disclosure to the consumer. They're all checking your background to make sure that there's nothing concerning in your credit report.
Who maintains credit histories and provides credit scores? They're called credit bureaus, and the three main ones that are used by most lenders and creditors are Experian, Equifax, and TransUnion.
Okay, so how to build and manage your credit history. Start a plan. Look at where you are by reviewing your credit and decide what your goal is and how you need to get there. You should establish a minimum of 3 active trade lines if you don't already have them. Consider opening a secured credit card with the credit union. We will also accept alternative sources of credit if you only have a couple of active accounts on your report, where you can provide the previous 12-month payment history for your auto insurance, utility company, or cell phone payments. Always make your payments on time. I personally set up my auto pay through my bank to make sure my payments are being sent and received on time. Don't have to worry about, checks in the mail. Be mindful of how many accounts you are opening or closing. Opening too many accounts can bring your credit score down. Same with closing out accounts. If you've had an active account for numerous years and have shown a great payment history, you may want to leave that open, which will keep your credit score as is or improve. You want to make your credit a priority.
How can you review your credit reports? You can get a credit report from annualcreditreport.com. However, what is recommended is that every 4 months you pick one of the 3 bureaus and you can get a detailed report with everything that they have for information, which can be reviewed for accuracy. If you see that something is not right or you disagree with something, it gives you the opportunity to notify them to file a dispute, which get the lenders and creditors have 30 days to respond to that dispute. Another way you can do this at no cost to you is you can go online and set up a free account with Equifax. You can check every month, and when they'll tell you how much your score changed by. They'll give you a detail on your accounts, whether your balances went down or your balances went up or you missed a payment. You can even see if there were increase to your credit, and it could alert you if there's a problem if you don't recognize those increase. So credit report, the reports will contain a toll-free number to contact the Bureau and a report number that identifies you in your record.
Okay, so if you review your credit and find there's discrepancies, you'll want to contact the credit bureaus directly. They've made it easy for you to contact them online, by phone or mail. You need to be specific with this dispute that you have, and you'll need to provide details for the specific dispute. The credit bureau will then contact the creditor to research your request. It will typically take anywhere between 30 to 45 days for a response. The creditor will then contact each bureau that they report to have the corrections made. You do have the right to have a comment added to your report that you're disputing the discrepancy.